All right, I've got a great show for you guys today. I'm going to do sort of a technical class on stocks hitting their 52-week high. I'm going to give you guys a trade example for a company that hit its 52-week high today, and I'm going to tell you guys, we're going to look at it from the perspective of what do I think this stock's going to do over the next couple months. I think it's going to be super interesting. I'm going to be sharing with you guys some patterns that you can begin to recognize in the charts. So that's going to be like a technical class today. On top of that, I'm going to be going over my predictions from yesterday regarding Tesla and Paramount. And I'm also going to give you guys some fresh technicals on Li Auto. All of it's going to be great. Tesla in particular, guys, that prediction was nailed again yesterday, almost to the penny, and I've got a change or a reversal of opinion on Tesla that I absolutely have to share with you guys of where I think it's going next. Then I'm going to show you guys briefly an ominous stock that is hinting at a coming reversal for the markets that we all need to be keeping an eye on. I used to talk about it a lot in 2022 when the markets were falling, but then I stopped when the markets began to run up. Well, yesterday it broke to the upside. I'm going to share that chart warning with you guys as well. It's going to be a great show. This is the Stocks with Josh show. Thank you guys for hitting the like. Go ahead, throw a heart, say hi in the comments. If you guys need to get these types of predictions, analysis, and the plays that I'm trading each and every day in the stock and crypto market, then you got to hit the subscribe and the YouTube all notification bell. Yesterday, I did a meet and greet in LA with Stock Up with Larry Jones, and it was an absolutely phenomenal event. A ton of people showed up. We had a great time. It was so wonderful meeting you guys, and I just wanted to acknowledge a handful of gifts that I was given. I believe by the gentleman by the name of Kevin, gave me this incredible bottle of bourbon. And then I got this Terra Cafe coffee. This was from a gentleman by the name of Javier. His family grows and produces this and imports it. And I had my first cup today, which I thoroughly enjoyed. Thank you so much, Javier, for coming out and for this special gift. And then an amazing gift I got from a wonderful woman. Gave me this beautiful $50 gift card and these Godiva chocolates, and she owns a restaurant here in San Diego that I can't wait to check out. It's a Vietnamese restaurant, I believe, called Tan Tin Chai. I don't think I'm pronouncing that correctly, but when I go there and try out their food and learn how to pronounce that name, I'll come back and share with you guys what it was like. Plus, a beautiful young couple that gave me this really special Las Vegas mug. I have to thank Barbara and Martin Chavez. They were just wonderful people, and I heard that Martin is an artist, and he's actually going to prepare me some piece of custom art and mail it out to my office here in San Diego. It was a wonderful event. Thank you guys that came out, and we look forward to doing it again. Larry and I walked out last night, went to dinner, and we were saying, you know what, we need to get Stockmo and Keenan Grace out here and redo it again some point here in the future because it was just so much fun. Okay, let's talk about stocks that are hitting their 52-week high or their 52-week low, because this is a special category of stocks that you want to take a minute and look at each and every day, because stocks that are hitting a 52-week high absolutely have the opportunity or a higher potential of continuing. This is called, at its most fundamental level, trading the trend. You've heard that before. The trend is your friend. And so if you're picking stocks off of the 52-week high, you have the potential of stocks going higher. And if you're picking stocks off of the 52-week low, you've got the potential of them going lower. I took an explanation of this off of Quantopedia that basically describes the 52-week highs as having an anchoring effect. It's a psychological bias that people use, the anchor effect of the stock, to consider the impact of news. And so this is what it means. If the stock is up at its 52-week high, it creates sort of an anchor effect. They take into consideration if it's good news, then they think to themselves, well, this stock could potentially continue to go higher. So they give the stock the benefit of the doubt. And so it continues to push the stock higher. And similarly, when stocks are down at their 52-week low and they get bad news, well, then they just consider that this stock needs another round of beatings and it's time to push it lower. And so this is called the anchoring effect. And fundamentally, it's basically a momentum play, which simply means that the assumption is that the asset has performed one way or the other, it's likely to continue to do so. So what stocks today are at their 52-week high and likely to climb higher? Well, very interestingly, an entire category of stocks which is the foreign automakers. We're talking Toyota, ticker TM, Hitachi, HTHY, Honda, HMC, Mitsubishi, MUFG, Subaru, FYGHY, and Mazda, MZDAY. All of these today were hitting and making a new 52-week high, which was absolutely incredible. I decided to take a step back and look at the one that I thought was best in class, which I consider to be Toyota. And I think that this is going to set up to make a wonderful class. I noticed so many interesting chart patterns in this stock, and I think it could give us an opportunity to trade Toyota a number of times, some swing trades, or even potentially a longer term hold swing trade. But I think there's money to be made both going long and then eventually shorting Toyota. I'm going to share with you guys my game plan. But before we get into the charts, why exactly is Toyota ramping up? Well, there's a number of reasons. They had lost a ton of production capability back during COVID. Their business's ability to output cars had been significantly damaged, but now, in the last 3 years, they've had the ability to go full swing back into production, which means they're going to output more units, which means they're going to potentially sell more into the marketplace. But there's even a more interesting underlining story. And to uncover that, I want to share this article with you guys. It says, why Toyota, the world's largest automaker, isn't all in on electric vehicles. So now this is where it gets really interesting, and this is not going to be the meat of this video, but it's so fascinating and important for you guys to understand. If you really understand how the EV marketplace is overtaking, how Tesla disrupted the legacy automakers, and now everybody in the entire world is trying to get on the bandwagon of EVs and begin to compete in that arena, it appears that Toyota knows something or recognizes something, especially in the global market, that seems to be getting overlooked in America. Right now, this article says that General Motors and Ford are putting everything all in on going to all electric vehicles. And as I told you guys yesterday, they're getting that federal stimulus to make it happen. But here's the problem. If you really understand the electrical infrastructure in the United States, and I personally have a friend back in the Midwest who works as a foreman in that infrastructure, and one of the things that he used to tell me every time we got together was that they just didn't have the parts. He said, Josh, we used to have an inventory of repair parts for the infrastructure. He said, we don't have any of it. He said, we're waiting weeks and weeks, if not months, to get some of the essential parts to maintain the electrical infrastructure of the Midwest. He said, if people understood how fragile the system was, it would terrify them. And yet we know that the federal government and the entire automobile industry is pushing with everything they've got into becoming competitive in the EV marketplace. Now, Toyota is competitive in EVs. They've been doing it for a long time. They were one of the first to push out a car like the Prius, which was very successful. But they also understand something, that not only does the U.S. not have the electrical infrastructure to support all of these cars, but the rest of the world has even less infrastructure. And so if one of the fastest growing economies is India, they're going to continue to need to rely on gas-driven vehicles. And in addition to that, the majority of these EV cars are luxury vehicles providing way higher performance, and the price of them is way higher than the typical everyday average American vehicle. And so Toyota is going to continue to be a price-conscious alternative to EVs. And so that could be why in the midst of this EV heyday, we're seeing all of these foreign automakers at their 52-week high. Guys, if you have thoughts on that, I'd love to hear from you in the comment section what you guys think about what I just said. Can we even replace all the gas-driven cars in the world with electric vehicles? I mentioned to you just the other day, in Biden's Inflation Reduction Act bill, they put in the law that they have the ability to monitor how many miles that you drive and the ability to turn your car off if you've driven more miles than the infrastructure can allow. So it'd be so easy for them to say, guys, the system is overburdened. Today, you can only go 22 miles. But listen, if your work is 23 miles away, that means that you're hoofing it and you're walking that final mile because the government turned off your car. And so this is a big conversation, and I'm not going to dive into it today, but this could be one of the reasons why these foreign automakers, which are not getting on the EV bandwagon the way that the US automakers are or the Western world automakers are, could be why they're at 52-week highs. All right, but what do the charts tell us? Like I said, it's going to be a technical trade class. We're going to be looking at ticker TM for Toyota. Now, Toyota is close to a take profit. The 178 is a resistance that it's currently pushing up against. But here's what I want you guys to see, because like I said, this is going to be a class. The current candle that we've got today, it's actually bullish. It tells me that there's going to be another candle that's higher than this one. I'm looking for a shooting star candle, which is very similar to the one we got the very last time that Toyota went up and hit a peak. So what is a shooting star candle? It's a candlestick pattern that's indicating a potential price trend reversal. And right now, we've got a full-bodied candle. This simply indicates that there's going to be a higher candle next. But the shooting star candle appears at the end of a bullish price trend. And so even though I think that Toyota is going to be bullish, I want you guys to see the trade range, because we don't want to be buying at the wrong candle at the wrong moment on a hot stock. Toyota, I think, is likely going to pull back to its 100 MA, and it's going to then continue in this pattern. Now, if we go back in time, at the last time that Toyota hit its all-time high pattern back in 2021, we saw a perfect example of a bearish ascending wedge. Now, an ascending wedge sounds bullish, but in truth, these often ultimately end, as they get to the end of the wedge, they ultimately end by breaking to the downside. Now, for Toyota, right before it ultimately broke to the downside and it went down all of 2022, it did have a fake out flash up where it made its all-time high, and then it began to bleed off. And I think it looks like the charts are very likely setting up to repeat that exact same pattern, and that's the one I'm going to be watching to trade. I'm going to begin to cover this stock in upcoming videos so we can share and see how it went together. I'm going to be trading it. You guys get to watch and follow the journey and see what I see develop in the charts. But here's what I'm going to be looking for, and here's the patterns that are guiding me. It's an ascending wedge. I think the bottom of the wedge is going to be slightly above the 200-day moving average, and then we're going to see it come back and make a new high slightly above the one that we just made. So we're going to see a series of higher highs and a series of higher lows, which eventually runs us up back to what I think is going to be the previous all-time high price of that $213 mark. And then it's very likely that we're going to see a double top, which is a rejection pattern. And it could be opening up for a huge opportunity to then short Toyota going down. But we've got quite a bit of time before we would even consider that. The wedge is just beginning, and it's just beginning to provide us a potential consistent trade pattern. But we could have a huge pullback because of the looming recession that we all know is around the corner, potentially sometime in 2024. We could see this trade pattern play out in this ascending wedge, but ultimately hit a wall in 2024 where the economy pulls us back, and it wouldn't shock me if it coincided with that $213 price. So there's a ton of money to be made on this, and I'm going to enter into a put right after I get the right candle, and I'm going to try to ride it all the way down to around $150 mark. And then when we get to that lower level, then I'm going to write a call back up to the top of that wedge. That's how I'm going to do it. But like I said, there's a looming recession. It's probably going to hit in 2024, and it's going to bring an end to this trade party I'm going to try to have with Toyota. And I hinted to a chart at the beginning of this show that just gave us a hugely ominous read, and that's the Dixie, the US dollar. Guys, I need you guys to look at this chart with your own eyes and understand how reading the Dixie gives us an indication of which direction stocks and crypto are going to go. So we just experienced a clean breakout above the 2023 resistance, and we're looking at it get above the 200 moving average. It closed back above, it back tested it, and then it's taken off with a new green daily candle. All of this signals that the dollar is going to be going higher. Now, I want to read something from Fidelity Investments page, which explains the correlation between the dollar and stocks. Here's what they have to say about it. The dollar is strong because the U.S. economy is healthier than those of many other countries, and because the Federal Reserve keeps raising interest rates. Now, that sounds really good, doesn't it? But hold on. A strong dollar hurts stocks of U.S. companies that operate internationally and may help stocks of companies that export products to the U.S. So while we're seeing the Dixie break out to the upside, doesn't that give some explanation as to why we're seeing all of these foreign automakers hitting a 52-week high? There's a clear correlation. And if that dollar continues to rise, then a lot of American stocks, specifically the Magnificent Seven, which we also saw on the S&P 500 heat map, all red, all in decline, Well, here we go. The dollar is breaking out, and so it's a huge concern. We're going to have to go back to watching the dollar, because when the dollar breaks to the downside, we're going to see the Magnificent Seven take off to the upside. But when the dollar breaks up, we're going to see pressure, sell pressure on them. Okay, in just a minute, I'm going to be covering Tesla, Paramount, and Li Auto. But before I do that, let me take a quick station break for the Moomoo investment app. Guys, if you need better trade tools as a retail investor, I would suggest the Moomoo investment app. It's a zero cost to trade platform, and they're currently giving away for customers in the US audience up to 16 free stock, as well as a $50 cash bonus. Now, this is available in the US, Australia, and Canada, and you can get to the top pinned comment where I've left a link to go look at that limited and exclusive time offer. But besides the fact that you can get free stock and cash, I specifically like their tools. I really believe they've got the best trading tools for the retail marketplace. So if you're a new beginner and you need a better trade platform, you're going to get their free level 2 data. You're going to get their stock screener, which is the thing I use to look at stocks that are trending or going higher. You're going to get their earnings calendar, which I particularly use. I think it's the best out of all of them. And I think they've got the best news. I read articles off of Moomoo every single day. And I host a chat group on the app called Stock Josh Fam. So you get your free stock, get your free cash, start investing, and then come find the chat group. After today's video, I'm going to go spend some good time in the Moomoo chat. I'm going to be running technicals for people and answering questions. And after I go to the Moomoo chat, then I'm going to go over to the Patreon. Now, the Patreon is a Discord that I recently started with 4 other successful traders, Stockmo, Stock Up with Larry Jones, Keenan Grace, and myself. We're all giving trade signals in there, and we also have a great chat. After I go into the Moomoo chat, I'm going to be going over to the Patreon. I'm going to be answering questions. All right, let's get into Tesla. Man, I got to be honest with you, even I have been surprised at the successful predictions that I've given on Tesla. It's incredible, almost to the penny. Guys, yesterday in my chart, I showed you guys that I had a prediction that Tesla was going to run up to $256.40. And yesterday it closed at $256.49. I guessed the Tesla close of the day within 10 cents. That was an absolutely incredible prediction. Now, I sold my Tesla, right? And I had a more bearish view. If you remember what I said next, I said the likelihood is that we were going to reverse and go back into the low to the mid 230s is what I had predicted next, but I'm reversing it because of what I've seen in the charts, and I want you guys to see it with your own eyes. We got an absolutely incredible candle with a very large lower wick or tail. And this also looks like it's forming into a flag shape pattern, which is very bullish. It's a run up, a flag shape pattern, which often breaks up to another run up. Now, if you go back in time, Tesla did this not too long ago, and it seems to be forming the exact same pattern. And so instead of us going down right now, I think before we go down, we're going to see a final push up. I think it'll fail there, and then potentially we're going to go back into those 230s. So just to be clear, I'm actually expecting Tesla to make another push up before it breaks to the downside. Now, I'm not always going to get these right. I've been very fortunate to get these predictions extremely accurately for quite a while, but just keep in mind, these are not a suggestion for what you should buy, sell, or hold. This is what I'm doing with my money, and this is how I'm seeing the charts, and I'm sharing with you guys what in the chart I'm seeing so that you can grow, you can do your own due diligence, so you can become a smarter and more proficient trader. So we're going to keep it easy. We've got a flag-shaped pattern, and so here's what that means. As long as this thing does not break below $246 and we stay in this flag-shaped pattern, I imagine that we're going to somewhat move sideways until we get a strong breakout, and I think that that breakout is going to be a push-up that's going to this also coincides with another technical. It would push us to the top of the Bollinger Band, which would seem to be a reasonable destination for the move that we've gotten so far. And at that point, I do think that we would come under sell pressure. But before we go down, it looks to me like we're very likely going to move sideways for our next couple days. Or it could move fast, because you know Tesla moves fast. It moves faster than sometimes you can expect, and we're going to see a breakup possibly to that $270 mark that I gave you guys before. All right, let's cover Paramount. I talked about it yesterday. Now, this was a pick off of the 52-week low list, and today it broke down in price, which actually makes sense based on what I shared with you guys, that winners keep winning and losers keep losing. Now, I believe that this thing is going to be a huge reversal the minute that they announce a resolution to the writer's strike in Hollywood. I think Paramount's going to jump up to my target price of $17. So I did not close my call options, which I've got pretty far out. I simply opened up some put options. It's just an initial option. And if we do break that $13.40 mark, I'm going to load up on puts so that I have a straddle. Puts that I bought, that I already bought one of, I'm going to buy. Those are going to be shorter time frame puts, while the calls are going to be longer time frame puts. It's sort of like a straddle, and I'm going to play it both ways. Initially to the downside if we break down, and then to the upside if we get the conclusion of that writer's strike. And so I'm still holding on to Paramount, but I've hedged my position so that I don't get stuck with it just going one direction. Okay, let's get into Li Auto. And the reason why I'm covering Li Auto is that somebody in the comments section had asked me to cover it a while back. And then yesterday I covered 4 EV automakers, and I failed to remember to cover Li Auto for them. And they gave me a somewhat unkind comment. They're like, Josh, you didn't cover it. I guess you don't know anything about Li Auto, or something like that, which, you know, I'm going to cover it because I told you I was going to cover it. And I think this chart was quite interesting to me. Hopefully this information helps you. So let me get right into the technicals on Li Auto. So right off the bat, today it had a small move up in price. When I looked at it, it only moved up 5 cents. But here's the problem. It moved up 5 cents. Okay, so the direction is up, but the volume was down. Typical daily volume was down 54%. And so we don't have confluence between price and momentum. We've got price moving one way, we've got momentum moving the other. That's called bearish divergence. And so Li Auto potentially is getting ready for a pullback or a trend reversal. Now, it could move sideways in a distribution pattern over the next couple weeks, but if you look back in the history of Li Auto, it really hasn't had a pattern of doing that. When it runs up and hits a new high, it tends to break down to the downside very quickly. It doesn't really do a lot of sideways distribution up at its higher end based on previous history. And so even though that technically is possible, I think that if this has hit its local top, I think it's more likely to come back. And if you wanted to be a long-term investor in Li Auto, I see a buy range or an area of support between $32 and $27. And so the Li Auto stock actually looks pretty good, but I think that we've run up quite a bit and it could continue to fluctuate in this area. But if you're thinking of getting into it, I really would hold off and wait until it got back into a better buy range between $32 and 27 cents. And you may even consider taking some profit if you were swing trading it. If you're a long-term investor, then you just buy more on the pullback. Full disclosure, I'm not in Li Auto. That's just what I see in the charts. Okay, guys, that wraps it up for today. Thank you so much for joining me. As always, I appreciate every like I get. I will say that, I get 30,000 views per video, and sometimes I only get a couple thousand likes. So some of you have been coming, eating at the table and not putting that like in. So if you could take a minute and put that like in, it helps the algorithm, and I appreciate it. If you like this content and you learn something and you want to participate on my trade with Toyota, then you've got to hit that subscribe and that YouTube all notification bell. And as I said earlier, I'm going to go into the Moo chat after I post this video, as well as I'm going to be in the Discord for an hour today as well. I'm looking forward to connecting with you guys there. Peace and blessings, my friends. Take care.